right, so let's talk about part two, okay, of our financial statements. We're going to, at this point, and I've got to figure out where I am, we're at this point going to look at, I guess I've lost it. At this point, we're going to look at our statement of retained earnings, okay? So on your statement of retained earnings, right, first let me review a couple things with you real quick. Remember that only one account, each account type will be reported on only one financial statement, okay? So again, each account type will only be reported on one financial statement. So you will only find your revenues and expenses on the income statement, okay? Your revenues minus expenses give you your net loss. The other thing is, on your statement of retained earnings, you're going to use your beginning retained earning balance, which is going to come from your adjusted trial balance, just like the revenues and expenses did. Your net income, right? Your net income, I need a pointer. Your net income, hold on, let's see if I can find one. I'm going to put you on pause for a second. Okay, cool. Let's see here if we can straighten up a little bit. Looks like there we go. Hey, man. And I found a stylus. I can use a pointer. Your net income or your net loss. Remember, you can't have both. You've got to have the one or the other. Your net income or net loss is going to go to your statement of retained earnings. And then you're going to subtract your dividends. And your dividends, okay, your dividends is the amount that's going to come from your adjusted trial balance. So after you finish your statement of retained earnings, if you are using your adjusted trial balance as a check sheet, then all the accounts that are revenue accounts, expenses, the dividends, and the retained earnings should all have a check mark by them, okay? So then you've used all those numbers one time. You may not use them again, all right? So you have your ending retained earnings here, okay? So let's look at an example of what that might look like. And I sent you, this is also, it's called Lecture Notes Exhibit 1. This is also in your textbook as well. It's Exhibit 2 in your textbook, and it goes through the whole problem, so there's an adjusted trial balance there. So your statement of, your statement of retained earnings, remember it is a subsection, and I think you've seen this in your notes. I feel like I repeated myself a lot because I've typed a lot of this before. But the statement of retained earnings is actually a subsection of the statement of owner's equity. But in ACC 111, we only teach you the smaller component. When we get to ACC 230, we'll add the other components to the statement of owner's equity, okay? So in this particular problem, right, there's no retained earnings because it's the first year of operation, okay? But notice that at the beginning here, it says retained earnings November 1st, 2015. This is the beginning of the period. It's the beginning of the 2 months, right? 2 months ended. So what's the beginning? November and December. So November 1st. So the date here is always going to be the date of the beginning of the period. So if it was for the year ended December 31st, then this right here would be January 1. Does that make sense? Okay. Now you've got your net income, which is going to go down right here, and it's going to show you the net income for the period. You do not need to put for November and December. You can just put net income, okay? Less dividends, again, this number is coming from your adjusted trial balance, gives you an increase in retained earnings because your net income is greater than your dividends. If your dividends was greater than your net income, then this would read decrease in retained earnings, okay? Or if you had a net loss, you would say net loss plus dividends, which would also give you a decrease in retained earnings. You might want to pause me here so you can write that down or listen to it again, okay? And then, so remember, the single underline tells us that we've done a mathematical function. And in accounting, we're going to, unless it's on the income statement, right, where we know revenues minus expenses gives you net income, we're going to write if we're adding or subtracting. So in this case, we don't say plus or minus, or we don't say minus, we say less, okay? We don't say minus, we say less. So it's going to be net income less dividends, and that gives us an increase. We have to label every number. So 7,105 minus 4,100, how do I know it's minus? Because it says less, right? Equals, single underline, $3,105. Now we remember we put our answers either below or to the right. And the reason this is to the right, because this amount, beginning retained earnings, is going to be added to the increase. So 0 plus 3,105 gives us 3,105. Okay, you have to line your numbers up. Please don't forget that. I take off points for that. Are you with me so far? Awesome. So that's your statement of retained earnings. So now if you're looking at your adjusted trial balance, right? If you're looking at your adjusted trial balance, at this point, the only accounts that you should have left are going to be your assets, your liabilities, and your capital stock. Those are the only ones that we haven't used. Your balance sheet is, I had a professor, Professor Mittler, he used to call it the models, the Vogue statement, that's what he was, the Vogue statement. And I was like, okay, what does Vogue have to do with accounting? Because we all know, I told you the story about getting kicked out of the accounting class. So you all know that I knew some stuff before I started my college classes. So I'm like, I don't understand. I never saw Vogue, never saw a model. And what he said is, with a model, you take a snapshot. It is a picture. It is a specific point in time. So the balance sheet tells us what our financial position is at that point in time. Think about it in terms of your ATM, okay? When you go to the ATM and it gives you a balance, it tells you how much you have at that moment. If you go to the ATM 3 hours later and you've had transactions, you went shopping, then it's going to show you what you, when you go back to the ATM, it'll show you what you had at that moment, which is not going to be the same as what you had 3 hours ago. So a balance sheet is like a snapshot, a specific point in time. So it's going to show us our assets. And again, it's set up like the accounting equation. So we're going to total up all of our assets. We're going to then total up all of our liabilities. And then we're going to add our common stock plus retained earnings. Okay? Plus retained earnings. And so that's going to be plus the ending retained earnings. Let me stress that again. Ending retained earnings. And that number is going to come from your statement of retained earnings to give your balance sheet. Okay, your fourth statement is a statement of cash flows, and don't forget that we will learn how to do that next semester. All right, are you with me so far? Okay, so let's look at, really fast, an example. Oh, really? Did I close it? Drug smoker. Okay, here we go. So the example of a balance sheet looks like this. If I can get it. There we go. So see, we have one side, and you can do it, by the way, in your text, it shows it as a portrait, but you can do it landscape. So, you know, one on top of the other. So you have your assets, you have your current assets. Now, what are current assets? Let's make a note of this. Okay. Current assets are those assets that are going to be, that are cash, are going to be converted into cash within 1 year or less. Let me say that again. I guess I don't really have to because you can push the back button, but I'll say it again anyway. They're going to be cash. Their assets, current assets, are going to be those assets that are cash, are going to be converted to cash within 1 year or less. Notice our current assets are listed in the order of liquidity, right? How quickly will they be turning into cash? Okay. So we have cash listed as first, accounts receivable, supplies, prepaid insurance equals total current assets. We have our property, plant, and equipment. Those are property, plant, and equipment. Make a note of this. Is the same as fixed assets. Again, let me say that again. Property, plant, and equipment is the same as fixed assets. Okay. So property, plant, and equipment, right, is going to be those assets we depreciate. But remember, land is the only fixed asset we don't depreciate. Okay. So we have land and we have office equipment, but office equipment gets depreciated. And remember, accumulated depreciation is a contra asset, which means it has a normal, right? It has a normal debit balance. I'm sorry, it's a contra asset, which means it has a normal credit balance. Sorry, I was trying to play with the screen and talk to you at the same time. Some people can't chew bubble gum and run too. That's me today. All right, so accumulated depreciation is going to be subtracted from the other other current assets. All right, so if you notice, you have office equipment less accumulated depreciation equals $1,750. You're going to take the $1,750 and add it to the land, which equals $21,750. You're going to take the $21,750, which is the total property, plant, and equipment, and add it to the total current assets, and it's going to equal $29,495. Okay, that's your total assets, and this is the proper way to list them. Are you with me? If not, press pause, go backwards, listen to it again. Okay, then on the next side, and remember, if you're doing it vertically, you can put it underneath here, right? If you're doing it on paper and you don't want to scrunch up your notes, just go underneath. Okay, you're going to have your liabilities, current liabilities. Let's talk about that. Current liabilities are those liabilities that have a due date of 1 year or less. Again, let me say that again. They have a due date of 1 year or less. Okay. Not that we're necessarily going to pay them. They just have a due date. All right. So you're going to list your liabilities. Technically, you should have total current liabilities here because we may have some long-term liabilities that we would list under here. But under these problems are pretty simple right now. All right. So you have your total, or you have your current liabilities equals total current liabilities of $1,390. Then we're going to put a subtitle here. Shareholders' equity. It's like we have the subtitle for liabilities and the subtitle for assets. So we have the subtitle shareholders' equity. We're going to list our common stock, $25,000, which comes off of your adjusted trial balance, plus your ending retained earnings, which comes from, hold on, let me scroll down, your statement of retained earnings, right? Let me scroll back. Ending retained earnings, which gives us total shareholders and equity. So 25,000 plus 3,150 equals, can't stress the single underline enough. A lot of students miss that and miss points on my midterm. Okay. So we're going to take the 28,000, sorry for the shaky hands, 28,105 plus the 1,390 equals, single underline, the total liabilities and total equity, which is a total of 29,495. It happens to, as it should, equal total assets. So that means that we have a balance sheet that is in balance. Now, there's a couple of things I want to tell you before we wrap this up. Notice that we have dollar signs at the first number in every column, first and last number of every column, okay? Don't put dollar signs next to every number. They need to be along the first and last number of every column. Also, when we are in balance and we are finished with that statement, we put a double underline. So I don't know if you can tell that this is a double underline. Let's see if I can make it look a little. See? Double underline. It's hard to tell that. Again, double underline. That means we are finished. Notice all your statements have a double underline when we have finished that statement. Okay, so please make sure you include double underlines. Does that make sense to everyone? I hope so. Okay, so now what I'm going to want you to do is I want you to practice and, sorry, everything's kind of blurry. There we go. I'm going to want you to practice preparing your statement of retained earnings and preparing your balance sheet. You've already practiced your income statement. I want you to practice those in a couple of exercises, and then we will move on to closing entries. Fun time, right? Can hardly wait. All right, my friends, hit pause or hit stop. I'm sorry, because I'm going to stop now. Hit stop, go on to Cengage, and we'll do some more.